Good morning. This is India Markets Brief from Toro IQ. Your read of Friday's session. The biggest thing India did on Friday was change a tax rule. The government scrapped the taxes that foreign investors pay on Indian government bonds, a move designed to pull overseas money into Indian debt. The rupee firmed almost 1% on the expectation of those inflows, even as the dollar was rising everywhere else. And it all landed on a brutal global day, with a chip and artificial intelligence sell-off tearing through Asia. India barely flinched because it owns very little of that chip cycle. Here is where the market closed on Friday. The Nifty 50 finished at 23,366, down a slim 0.21%. Banks were the bright spot, with Bank Nifty up about 1/3%, because that foreign money package reached straight through to lenders. Information technology was the soft corner, down about 1%, a sympathy move with the chip sell-off in Asia, where Korea fell 5.5%. But Indian IT sells software services, not chips, so the damage stayed small. Metals were the worst sector, down 1.6%, and that was a price story, not a demand story. A stronger dollar crushed gold, silver and copper worldwide, and Indian metal stocks just tracked those prices. Here's the signal underneath the flat close. The rupee firmed even as the dollar rose against the euro and the pound. That is unusual, and it was India-specific. The bond market agreed, with yields falling sharply, so this was a bet on real foreign money coming in, not a global flow. Now the two policy events behind that bet. On the supportive side, growth came in hot at 7.8% in the March quarter, well above the 7.2% that was expected. On the cautious side, the Reserve Bank of India held interest rates steady, but it raised its inflation forecast and trimmed its growth forecast, flagging a weak monsoon and high energy prices. So a rate cut is not coming soon. Now the movers. The clean winner was Paras Defense, up 7.4% to a one-year high. The company makes optical and electronic gear for defense. On Friday, it won a 53 crore rupee order from Bharat Electronics, on top of a strong quarter where profit nearly doubled. The biggest faller was Suvin Life Sciences, a pharmaceutical name, down almost 11%. I will be honest with you. We searched 6 sources and found no fresh bad news on Friday. The stock had run up 77% in 3 months. So this looks like simple profit taking, and we will not invent a story it does not have. The reversal worth naming was Wockhardt, down 7.3%. That was a pullback too, after a rally that had followed a United States approval for one of its antibiotics. Now here is the one thing that struck me most about Friday. The heaviest blow to global markets did not land during Indian hours at all. It came after India had already closed. A hot United States jobs report arrived at 6 p.m. Indian time. The market gave up on rate cuts, bond yields jumped, and the Nasdaq fell more than 4%. Indian shares never got to trade any of that. So Friday only proves India held up against the Asian move. Whether it shrugs off the bigger American move is Monday's question, not Friday's. That makes the open on Monday, the 8th of June, the real test, when the market reopens to digest both the weekend's policy news and that overnight American sell-off. Early signals point to a near flat start, not a sharp catch down. That's your brief. Before I sign off, this has been general market commentary, not investment advice. For investment advice tailored to your situation, consult a SEBI-registered investment advisor. Markets are risky, you may lose money, act with care. See you next session.